What's up, you degenerate traders? Welcome to Inside Traders, where we talk about the big banks and institutions and look behind the curtain of their trades and see what they're doing every single day. Most days, we look at the order flow from the insiders and see what they're buying and selling. So, welcome to the show. My name is Caleb. I am here with your host, GDT, Gamma Delta Theta, who's teaching us today about delta hedging, which is something surprisingly that anyone could implement, which is an interesting technique that takes a aggregate calculation of your delta from across multiple contracts or a whole position or just one contract, and it fixes it to maybe like the start of the day or a certain number, maybe like the opening delta of the contract, for example. And then what it does, in theory, like when you're delta hedging properly, is you're always maintaining that delta. And anytime you have a deficit in that delta, you automatically purchase some kind of inverse equity. So you could sell a call or buy a put, basically. And then that offsets the deficit that was created from a stock decline in the delta of the contract that you're trading. But what's cool about it is I think you can do delta hedging on everything. So like, why not delta hedge your stocks as well? Consider them as like virtual contracts where, how would you hedge your stocks? I mean, like you'd err on the side of safety and you'd basically get like the delta of like your cost average in the option chain. So like if take Tesla, for example, trading around 230, 228, I think. Let's say you have a cost average of 200 on Tesla. What you would do then is you would take the contract that's expiring like maybe like this week or the next week, like very soon, because that's going to be not having much extrinsic value to the contract. And then what you want to do is get the delta from that contract and use that as like an approximation of your shares. Because like, let's say if you went below the strike price, don't need to show the world everything I'm working on, although maybe it's good for you to see because a lot of it is around basically trying to compete with the big guys out there. And I want to run with the big dogs, right? Like these hedge funds have all of these incredible tools and automation and automation that gives them such a tremendous advantage. So we can talk about this a little bit later, but like one of the things that you see happening every day in the markets, and this is so shocking to me, is 0-day options. And the reason why that is the case, okay, so like apparently 60% of all of the option contracts traded on any given day expire that week. And actually, not even that week, they expire that day. And we could see it. Let's go look at it. So like, if you look at this flow, this is the order flow for what these hedge funds are doing, right? So this is what they're buying and selling. This is where the real dollars and cents are flowing. Like you gotta like appreciate that for a second. Like this isn't just like green and red on a screen. This is the actual cash flow of the people that have the best information, the most real-time information, and the most at stake. Like here's the ground truth of what they're doing every fucking day. And so if you look at the ETFs, let's see what they're up to. Wow, very interesting. I've not seen a day like this in a while. So they're just putting SPY and QQQ hard, but silver is getting some freaking love. Let's see what the chart is on that. Let's stick with this. Silver is getting like a crazy bid. Let's see where we are historically. Is that everything? Just give me the whole picture, please. Okay, there we go. Nice. So historically, silver is kind of like, you know, it's not at a crazy level actually. This is an interesting shape. I've seen this shape before. Is this, when is this? Okay, no, I haven't seen this shape. Never mind. And anyway, so like you can go in and try to like investigate and reason for yourself, like why, too many tabs, why they might be buying silver or yang. What the fuck is yang? Yang. Stock. China bear shares. Oh, China's getting put down hard. Well, Xi Jinping, this is what you get. Apparently Xi Jinping's favorite thing in the universe, I've heard this like on multiple occasions, is to be compared with Winnie the Pooh, which if you look at him, he really does kind of look like him. It's a fun way to honor China and Xi Jinping is to compare him to Winnie the Pooh. He loves it. It's like his favorite thing in the universe. So if you ever meet Xi Jinping, maybe you're like at a McDonald's and he's wandering in, don't miss the chance to brighten up his day. So anyway, so SQQ, it's all bearish. Like the action today is super bearish. We can look at the tape. Here's the tape. Super bearish. We actually opened pretty bullish, but it was bearish like very quickly. And I'm with the bears now. Like you guys win. Let's stack up some anti-equity for real. And like, there's just no reason to pick sides on bulls or bears. Like, who cares? Why fight the trend ever? Like, always go with the order flow. And I'll tell you, like, it makes a huge difference in your performance if you're like, if you have a tailwind versus a headwind. And so that's why we like to hang out here, and I like to put the show on, is because I think this stuff is like super valuable. I'm no expert in any of it, but I think we can all just like look at the numbers, look at the charts. We can all see red sentiment, bearish. Okay, that's a great signal. Do you want to know why it's bearish? That's where the premium went. That's not an opinion. That's just the facts. That's the ground truth. Like the put to call ratio was 52 in favor of puts. It's not even that bearish, but I think by the premium, it probably was pretty bearish. So we're seeing some dark pool prints. Let's look at the, see if anything stands out to us here. Bullish, that's funny. These are probably inverse though. Oh no, weird, huh? So here's some like unusual action today. Like a lot of bull calls. What's the high premium here? On Amazon. Amazon is getting called, man. Wow, interesting contract. Wow, look at this. Somebody is putting a ton of out of the money calls into Amazon. Well, I don't know. Like, are we in a bear market? Are we in a bull market? I don't know. I don't care. I am gonna like follow the order flow. Like, that's the experiment of this show. I believe in the longest of terms that Tesla, Apple, Google, Facebook, Nvidia, these are great companies and they're going to be important in the long term. But for now, why not just do exactly what the smart money is doing? Because they have the realest time, like I said before, highest quality information. And so let's see what the chart looks like on Amazon today. Whoa, getting some love, getting bought up. So like, that's what I'm talking about. So, well, this is actually not the day chart, is it? This is from their earnings release. Yeah. No, this is like a really longer view. Okay. Well, look at that on Amazon though. That looks great. It seems like we're going like right there, right? we're about to fill this. I have no idea. How do I know? But like, this is the kind of stuff I look at that makes sense to me when these technical, oh shit, you guys can't see what I see. Sorry guys. I'm a new streamer. So like, if you look at the price line here, see how it's intersecting this giant red bar up. Like, it has to fill all the way to the top of this bar now because it penetrated past here. That's like how it works. Now, is it a guarantee? It's not a guarantee at all. And anything can change at any time. But like, if you just start watching how these candles actually behave at any time period, they really do retest. And like I've talked about in the past, I believe it's because you just have a lot of price events at these different levels, and you can kind of see how they intersect through time. So let's go back to that reading. I got to close all these tabs. Oh my goodness, how many tabs does a guy need? Apparently, I need a lot of them. All right, so let's check out this call. That's 700 grand. Wow, big call. How do I click on it? How do I get the deets? So let's look. So this is saying in like 2 weeks, it's going to go up $10. And then what was the gap on that? Which would be not even to the top of that. That would be halfway through that giant red bar. And then so they put like 700 grand. That's crazy. Wow. And look at the IV. That's going to be a really sensitive contract. Wow. Let's just go look at it. I'm not going to buy it. I'm a bear. I'm not going to buy it. I just want to look at it. There's nothing wrong with looking at it, right? We just want to see what it looks like. Okay, so the 145 call. Yeah, I see the volume on this today, 10,000. Today it's like 17,000. Shout out to the Hood. Our friends at the Hood. I don't know how well that shows up, but I should get this phone plugged in too. So let's see. Ooh, he's down. He's down. He lost money on this trade. So how much is he down? I mean, this is like, why not just make the trend your friend, you know? Why not? Why not? Well, we don't know if they actually exited the trade, but he would be down 8 cents, so 80 grand. That's depends on what you're playing with or what you got in the pipeline or whatever, I guess. So that's interesting. But like, let's go back to the general kind of order flow. This bullish flow. Okay, here's why we're seeing a day like today. It's because there's no actual premium going into bull calls today. Nobody was making bull calls. Nobody. Except me. No, I wasn't. I didn't mean to. I'm working on, I have a lot to share on the show. Stick around. We're going to cover a lot of stuff. So the reason why these charts look so different is because all of the action today was bearish. And here's the thing about like trying to like be a bull when everyone's a bear. First of all, you're like spitting into the wind. You spit with the wind, dummy. And secondly, you can just kind of look at where you are in history and in the price action, and you can see that people have a lot of good reasons to be bearish. Even just looking at the Tesla chart, it's like, at the top of a mountain. Nvidia, same exact thing. So yeah, like we're not going to fight the bears. We're just going to take a look at where the money's going, try to reason and think about why it's going there. And if it makes sense, we'll follow along. Because, like this is real cash. Like this is real money. They have reasons for doing what they're doing. And so In the macro though, I do think we're on like a tremendous bull trend. But like, you can go even if you're going to quadruple, even if you're going to 30x, you can fall in half twice before you 30x. And so everything has to be risk managed. And so that's something I would like to talk about on this show more in the future after I actually get my own ideas figured out and tested and proven. It would be just to like hedge in the exact same way as a hedge fund. Now, I don't know all the ways that they hedge. I'm sure there's like a million ways, right? But one way that does make a ton of sense to me is delta hedging. And you just take an aggregate of all the contracts in a position. So if you have Tesla calls in multiple chains, you just consider all of those as maybe you do like a nominal weighted delta, something, like you want to weight it by the size of the position. So if you have a $10 contract and a $10,000 contract, you want to weigh those deltas a little bit differently. But do you? I don't even know. I don't even know, because the deltas are going to be so really just correlated to the underlying asset that maybe you just want to take something that is more just like of an average. Is certainly something to experiment with. But it just makes a lot of sense to me that, and this isn't complicated or hard, it's completely possible. Like if you can't code it yourself, ask GPT, it can code it for you. You get an aggregate read of all the deltas for all of the contracts you own. So that gives you your index delta for those contracts. From there, you start tracking that historically. So at the end of each trading day, you read the delta, or maybe take an average of the day or whatever, but still you get like a delta for that day. And on the next trading day, if that delta is ever down by more than 1 unit of hedge, that's up for you to decide, then purchase hedge. And then like you can do that, sub 100 milliseconds or whatever. You can react in real time. And so like this stuff has only been possible for the biggest players until now. And it's actually, I think, the safest way that you could possibly really participate in the options market, where things can change so quickly. And there's a velocity to things. So like there's also the problem of like taking gains on the upside, not just protecting yourself from the downside. You'd be amazed at how big a number can be on the screen. That's really impressive. What's really impressive is cash out of the system in a bank account, right? Like that's what matters. And so it's one thing to be able to like hedge. It's another thing to be able to like play with these volatile instruments. By the way, that's what all of the big players are doing. They're only, like I said before, all of the action, all of the trades are happening with 0-day options. I know why. It's because they're the most sensitive contracts. And so like when you're at a technical point, it kind of makes sense to put on a trade or whatever, according to the direction of the overflow of the order flow, which was bearish. So if you had bearish action today, then you probably made money, right? Of course you did, actually. But how would you have known to go bear? Well, like maybe you're like a wizard and you just have like some kind of like crazy intuition about like the short-term price action. Cool. Like there's an easier way. Just like look at what the actual tape is reading. And this is a time-honored tradition. Traders have been reading the tape since time immemorial. And they would do it with Morse code across the ocean. They'd tap in, what is the price of wheat? What is the price of wheat? Because that information is so freaking valuable and is going to give you power. If power and money and information and energy are all equivalent or maybe derivative of something. Um, like information is power. And if you actually have the first information, that gives you a tremendous edge, especially in markets. That's why they were reading the tape. I can't remember exactly what the tape is. I think that's like, anyway, it's just like reading the trades of the other market participants. And that's because it gives you better information. So yeah, like the Bears are winning, and great for the Bears. Great for the Bears. Let's win more, Bears. It's great. I actually wish, I wonder if I can show you what this data stream looks like when it is in action, because it is pretty incredible. Let's see, can it page? Oh yeah, there we go. Nice. Wrong window though. Oh, no, I guess I can't show you. But maybe on another time I'll do a live stream where I've been playing with like I do some coding, and I have been playing with like a socket connection that shows me all of the live trades coming in, and it's incredible. It's incredible. It does give you actually, I think, maybe a little bit of an edge, because you kind of do see when the price it's hard to explain exactly what I'm seeing here, but it really is like a battle, and you have these points of support and resistance, and almost like clockwork. Let's go back to the Amazon chart. Is actually a good one. Almost like clockwork, you're going to retest and continuously cross these price thresholds where a lot of stuff happens. It's just a lot of trades happen there. So it's a natural boundary. And like nobody knows what the price of anything is or should be. That's why we have markets. And that's a great idea. Not mine. But yeah, nobody knows actually what the price should be. So that's why we trade all day long. And like we're trying to figure out what the price of stuff should be. But I think what these hedgies are doing is they're just like scalping the markets. I think that's what they're doing. They're just like doing these out of the money calls and just like collecting these crazy premiums. But like, and they don't care if it's bearish or bullish. Why would they care? Like, if they don't care, why would we care? We should follow what the people with the best information do. Ear day. So, unless we have really good reason to believe we're right and they're wrong. So, check this out. Where we are with Amazon, like this whole red bar, obviously this has to get tested up here. Now then maybe we do go down and we test around here or whatever, like even way like a third of where we're at. Probably not, right? There's a really long view. But if you look at the long view of Amazon, damn, good entry point would have been December. But the thing is, like when the market is down, nobody has money. You only have money when the market's up. So like that's the trick of these hedge funds, is they really make sure they have money the whole time. One of the ways that you would do that is by delta hedging. And so like, let's say you're just like the world's worst timer or whatever, or maybe like you're somehow like somebody's always playing the other side of your trade, and you're like there's always like somebody who actually knows what you're trading. So you're never going to be able to win that way. You have to actually be right. You can't be lucky. You have to be right. And so like, let's say you bought Amazon right here, like 167. Well, first of all, you know that there is a chance of going for sure back down here to 101, which is what we did. Look, we went even lower. And why do you know that? Because look at all that. That's all untested. Here's the thing. All this price has a history. Like Amazon does not actually have a very strong price history. See, this is what I'm talking about. After, what is it? It's 2015. Something happened in 2015. Everything exploded, and it has not been the same. So look at this. Totally natural, right? We can all see this shelf here. All this this is all new price territory, and now it's been tested. And do you want to know why the bulls are probably pretty bullish about that? Is because it's been holding these so well. And if you look at the long-term view, like we really do have this whole red bar to fill. Let's look at ARK. I think we'll see something similar. So here's again the long view, so we can see we're basically trading about where we were when everyone thought the world was ending at the pandemic, which is hilarious. It's hilarious. And so like what is the actual trend here? I'm trying to look in the chart and see, like, look at how many times we've intersected this price. 4120, boom, February 23, boom, May 22, boom, April 20, all the way back to 2018. So the first time we entered this price zone was end of 2017, early 2018. Like, that's crazy. That's crazy. And so everything is really on sale, I guess, is kind of like what it looks like to me. So if we zoom in a little bit here, we see the same thing as Amazon. And I don't think anyone really knows, and I definitely don't know. I'm just like I'm just reading this stuff kind of out loud as I see it. The thing is nobody really can know, because this isn't predictive. You can't like really bet on it, really. It just makes intuitive, natural sense that if we have new untested ground, we're going to test the shit out of that over and over until we're satisfied, and then we can go into untested grounds. So like if we go back to the start of this year, we have this big bull run up, and then we test all this ground. And it's good to think about, like, if you're buying right here and you're looking at that, you just got to know that, like, look, you're way above the past price history. You're kind of in no man's land. Sorry to anyone listening, but like, you have to be looking at the screen here. You're kind of in no man's land when you're not like directly pushing up against previous price history. And that's why we like consolidation, because when we're consolidating, we all start to feel real good about that level. And we actually for real do feel good about that level, because think of all the market action that's going to happen around that level. People are going to place limit buy and sell orders. As the price changes, those are going to get filled. And the deeper that we penetrate or the further we climb, the more that those actually get filled. And like, it's interesting to see if the buyers get exhausted or if it's the sellers that get exhausted first. So yeah, just looking at ARK chart, if you owned ARK at the beginning of the year, you enjoyed this nice run up from like 30 to 45. That's a big run up. That's quite a run up. And then we kind of like do have this great consolidation. We could have gone and tested 30 again, but we found great support at 35. And I bet if we look, we're going to see historically that when we've intersected 35 before, we've found support. Let's look. So look at that. It's so clear. Right through 2022, October through December, we were having strong support at 35. And this is why you need automation in markets. If you're going to be doing anything in option land, you need automation. Because when we do finally exhaust the buy side or the sell side, when all those limit orders get filled and all the ammo's gone, right? Anyway, you know what I mean? That is when we have a breakout event. And the breakout can be to the upside or the downside. But the reason that breakout is going to happen is because the other side gets for real exhausted. And like, so at 35, we have such a strong hold here, continuously going back to, okay, so this is intersecting a lot of time through history. Let's go to 35 exactly. Actually, I think we can draw a line, horizontal line on 35. Can we set it to be exactly 35? So, I think we can adjust it here. Okay, so let's get it. Nah, close enough. Okay, so here's the full history of 35. The price 35 on ARC. You could do this with any chart, with any number, and you're going to see the exact same patterns. So we find a floor here. We find a floor here. We blast through a ceiling here. Now, this is what's interesting about the pattern. Because 35 is such a durable pattern. Look at this test, so clean. Whoa, what's the low? 35.10. So this low candle in May of 22 bounces off 35.10 instantly. And like that is why when 35 failed in December, why it was like an instant drop down to 30 basically. What is it? Oh, the low candle is 29.43. So you can bet, like, let's say we have a black swan event and like there's a reason to go retest all of these price levels again. We could see if we could penetrate 35, and you can guarantee if we did penetrate 35, we'd immediately be testing 30. Maybe not immediately actually, but if we did break any meaningful level below 30, we're immediately going lower. Like, not just because of the algorithms that are going to trade that way, but because of the psychology of it. Like, it's when you push and you push and then you push really hard, but you still don't break through. You do get exhausted. And so like you could try again in the future or whatever. But yeah, like the bulls and the bears are always fighting. It's a total war, and it's blood and green, red and green on both sides. So yeah, 35 is getting intersected through a lot of time. And then it gets tested in 2022. The last test was the pandemic in 20. So March of 2020, our low candle was 33.32. And what's so funny about this, and I think this is more to do with market conditions than the price like sentiment or the like the actual sentiment on ARC. What's so funny about that is we traded below that low just recently, first of all, in March, but also way below it in December. And so it's interesting. But yeah, like look at these red candles. They just continue relentless selling. And so like, I kind of did a big trade right here. And in retrospect, why would I be trading anything above this chop? Like, this is why I'm trying to learn this stuff, is so I don't repeat any of these mistakes that I've made in trading. It doesn't make any sense to do any kind of a risky move on ARC above 45. Doesn't make any sense. Now, maybe at 45, now that we've broken below it, that makes sense. So like if you want to see if ARC is like actually going to hold again, then again, let's move this line up to 45 and we're going to see the exact same pattern again and again. So 45 is interesting here. This is a clear shelf. That might be more short term because we aren't seeing it instantly here. It does look like 45 is a little bit no man's land. What is a good level here? I need to zoom out to be able to see it. I don't know. This is all so choppy. Look at that. There isn't a ton that stands out to me anyway. Yeah, I guess this range. So this is like a consolidation zone, I guess, where it's just choppy waters. Oh yeah, look at that. Look at that. So this consolidation zone of 41 to 45 broke out to a test of 52, but then failed all the way down to 40. And then that became a new consolidation of 41 to 35-ish. And then we had this breakdown below 35. And like, it makes sense that if you break to 34, you're going to see so many sellers. You're going to see so many sellers. So like this is what the traders do. They wouldn't be doubling down on the way breaking below 34. They would be doubling down on like, something they would be acquiring here, like in a consolidation. But like when you break below a new low, obviously psychologically, that is going to trigger panic selling and high volume selling like that. Just again, all this stuff really makes intuitive sense. What is this line? 34. Okay, so that's the same line, 35 that we've kind of seen is up here actually. And so, yeah, like you could see like these are making lower lows. We're testing. We get this big red candle shafting us outside at the lower end of the Bollinger Band. And then this is where the bulls come in because they're like, hey, we just broke below 35 after like all these tests. Obviously, we're going to be, higher than that because historically it has never penetrated. But then it goes all the way up and we try to like retest the previous support becomes your resistance. So when we break through with this giant red candle in November of 2022 to the downside, the bulls come in and they drive the price from 32 up to 42, $10. That's a huge move. That's crazy. And that was just penetrating into the prior resistance or prior support of that consolidation period. And so, boom, you get rejected off that ceiling. And so look at that, like right here, there's the ceiling. This is the upper, like the lower end of this consolidation, which becomes the upper end when we test it here. And so then the other side, the bears who just got shafted from these green candles say, look, you failed to stay above the trend here. We're going to do like selling or whatever. And that's how you get like this up and down. This is all consolidation. And then you have this breakdown to 28 and boom, this is all new for me. It would have been nice to know all this, like, or to have seen these patterns like around then. But, the cool thing about markets and investing is the price is going to move, right? It's going to double. It's going to fall in half. It's going to move. And many, many chances over many, many years to get your favorite stocks at lower and lower prices. There really should not be an urgency to buy unless you actually have some kind of some reason that you think something imminent is happening. So that's a lot of what I think is like cool about this stuff is just looking at the charts and looking at the history and seeing what you can see. So Tesla is a pretty interesting one. I think the real test for Tesla is coming soon because look at, you can even see it. Doesn't that look unfinished? That looks so unfinished. Let's zoom in. How do I make it bigger? Like that is definitely going here, right? Maybe not there. Like let's zoom out and see what really makes sense. Okay, so again, psychologically, you're trying to get above this level. You try, you fail, you go back down. Then you're going to try to go to a lower level, but then you find support because the bulls are like, oh, we'll buy all day long at this price or whatever. But nobody knows where that level is. It's impossible to know. What you can know is that it makes intuitive sense that at a price level, which had a lot of market events, there's going to be like resistance or support depending on which side of the price you're on. So if you're going down here, now you get trapped. So like if you're in like let's say you buy the dip on Tesla at 175 and we break below that 170 line, which was like the prior support was actually like 150. And like, let's say you're just buying the dip relentlessly on Tesla the whole time you're going down. Well, if you just look at the history, you wouldn't be buying the dip relentlessly. Why? Because you can just see, okay, we hit this ceiling here, and then we found support at $100. And if you were like really trying to, again, by the way, where do we find support for Tesla in the future? $100. Is it a coincidence? It's not a coincidence. Like it's how these things work. And it makes sense if you consider it as like a fight between the buyers and the sellers, which is like why we don't take sides and we play for both sides, right? Like we just want to make money on the blood and the water or whatever, the green, through delta hedging in the future. So like, but yeah, like we break this support of like 170, 150. Of course, you're going to go test these things. Like if I would be buying it like 100 for sure. I mean, I'd probably be buying the whole way down like a dummy. But like if I was doing it strategically, I would buy at 100 and just be like, I'll start my cost average from here. If we're going to go down to 50, great. But I think the actual traders wait for confirmation from different levels of support, which is why you see this bullish action on Amazon, even though it just had a run up from its earnings, because the indicators show that they're still like, look at that. We have this red bar, like it works on both sides. If we're in the downtrend, well, we got to go test those lower levels now because we broke through support. But if we're in an uptrend, well, we have to go test this ceiling now. At least we have to test this floor, which we're at right now, actually. Interesting. 145 was the price of Amazon. 135. Oh, that was that trade. So that guy, not that guy, but like if we go back to the tape, this trade right here is betting on exactly that price level, 145. Is it a coincidence? No. It's not a coincidence. What he sees is he just puts his cursor right here, right? And then he's like, what was the low candle on that? 143, market's correct to the upside and to the downside. We'll say 145 will be the price target. And so like we at least have to test that. And guess what? You better believe that the first, unless it's a super bullish trend, the first couple of tests of 145 are going to be driving us back down. Because as we approach what used to be the support for this trend here, now we're going to get locked in on that box and we got to break through the box. But then when we do break through the box, there's no more resistance and the trend just keeps going, as we can see with NVIDIA, which is crazy. It's crazy. Like this guy, like here's the thing. If you're hodling NVIDIA, sorry guys, sorry. Like all of my time doing this stuff and everything I've experienced, like, and intuition tell me that in the fullness of time, this whole chop must be tested. And we just need a reason, right? They just need a reason. It can be a very bad earnings report. It could be a global catastrophe. But if there is a good reason, we're gonna test 350. We're gonna test it. Now we might bounce right back off that and go to like 900, right? But like you don't get to just keep all this for free until you do. So like I'm saying it like it's a rule. There's no rules. Anything can happen, and yeah, there's definitely no rules. So like if you look at Apple, like let's just look at the price history over the fullness of time, and you'll see a good example of like where there are going to be events for sure that you just never test that level again. So here's the Apple chart at around 2018. Is this, they barely had a decline in the pandemic. No, that's a pretty good decline. Never mind. And then they've just been on a tear. So they went pre-pandemic $80 down to 50. And then now they're almost at 200. So they're almost quadrupled from the pandemic low, which is crazy. Such a good time to buy stock. Who knew? Like a lot of people. So like, here's the question. I would actually say that, yeah, we got to test probably, I don't know, like where is a level where we're probably never going to test again. So in 2015, we were at $30. Then we get up to this range of $55. But then, hey, we test that $30 again. We tested that. And so all of this on Apple, let's zoom out so you can actually get a picture, an idea of it. Here's the history of the company. All of this is untested ground. Everything above $60 to 200 is untested. And now you might just say like, Apple is the world's most whatever. Sure, maybe the case. I don't know. Like maybe we're never going to retest because it seems crazy to think that Apple could fall in half. But there's black swan events, and there are, companies make mistakes or whatever. There can be some catalyst that gives us a reason to test 82 again. But really to test we would just test everything like level by level. So recently we've been testing 125, then we would go to 100, then we would go to 85, and then finally we would test $60. Maybe it's already been tested enough in here, but we'd probably test 80, not without a freaking disaster. So like, that's the kind of stuff to think about. If you're an Apple owner, like maybe you just buy a put around $80 for like 3 years out, set it and forget it. Because how much is it going to be? Let's go look. Let's go to the longest expiry time. And it's really hard not to sell puts, but whatever. So the longest expiry time buy put on Apple of $80. So that's December of 2025. That's like 700, 900 days or whatever. It's $1.50. So $150. So like for $150, you can hedge 100 shares of Apple, which has got to be like, 17 grand, 18 grand, 17 grand, obviously. So like you can hedge 17 grand against a price level that like we almost have to test, right? For $1.50. And so like when you don't want to be buying puts, unless you're playing a video game and just having fun, then like when you don't want to be buying puts is when you get trapped like below these different levels. They trap you in a box. That's how they get you. You don't want to be buying puts right after the move down. Like that sucks. First of all, because you're probably going to get burned on those puts and it's going to go right back up and it was wasted. But secondly, because you didn't capitalize on the collapse. And so you can't take advantage of the prices unless you just use new money or whatever. But like, think of that. So 17 grand can be hedged for years, for like 2 years, for $150, like at something that we have to like anyway. It would require a black swan. So like whether or not you spend that $150, I don't ever spend it. I'm trying to convince myself in talking to you guys that it's not a bad idea to buy puts. Like it might be a freaking good idea. So yeah, that's what's going on in the markets. I think ARK is bud. Like, look at, we're breaking through every line. Like we definitely have to go like to here. Where's that? $40. Yeah, we have to test 40 for sure. We have to test $40. So I believe that if I really believe that, what I would do is buy some puts. And I think we have to test it soon. So let's see how this might actually work in practice if we want to be traders. So yeah, like buy put for, it's $1.20, but that's pretty expensive. It's really close to the money. That's why. And there's 21,000 people interested, or 21,000. It's the highest slot on the chain tick down or whatever. It's 2 ticks down from in the money, and it's got an open interest of 21,000. 41 has an open interest of 5,000. This is for September 15. And so that is kind of an expensive put. Had you bought it yesterday, tomorrow you're going to be paying $1.50. Had you bought it yesterday, you would have paid $1. Had you bought it a month ago, you would have paid 66 cents. Why would you have bought it a month ago? Well, let's look in time and see where we were 1 month ago, mid-July. So 1 month ago, we're right here, actually. We're in this decline, this test down. Actually, no. 1 month ago, we're like peaking. Okay, so yeah, perfect. 1 month ago, we're like at this like giant, look at these green candles. These are big green candles. And we get all the way up to 51, which I guarantee is going to be a prior support of whatever. I mean, we don't have to go back and like look at why 51 matters, but it's not a coincidence that $50 is like, guess what? This is going to be a hard test to break. And when we do break above 50 on ARK, it is going to be game freaking on. You want to know why? There's not going to be anything above that. Like the sellers won't have had anywhere to accumulate from the top. I don't know how to say it. Like it's definitely going to be a bonanza when ARK breaks above 50. It's like, it'll be the same thing as this when we broke below 35 down to 30. And then like they punch right through. Well, they blast right past 35 all the way up to 45, $10 higher. And so, yeah, maybe we see like 60, $65 on ARK after. But like first, see this? That is strong. Look at those bars. Boom, boom, boom. That's a prison. You got to break out of that jail. Like, how are you going to break out of that jail? You need a lot of buyers, a lot of interested buyers for sure. And so like $50 seems, it's not even 50. It's like 49.50. It's like so clear. But like we were sizing this put. So like a month ago, you might have been like, hey, we're unproven grounds. The last time, it's been a year since we were at this level, exactly a year. And hey, what happened at this time last year? Oh, we had a decline followed by a rally. When did it? Not till September. Oh my God. Well, hey, that's why we look at the charts. And that's actually why we don't take sides. We don't take sides. We just follow the order flow. I'm trying to convince myself of that. So, yeah, like that's interesting. If you were looking at things historically, which is a good idea in life to have an idea of history and where you stand relative to time in history. So it makes sense if it's good for life that it would be good for markets. So look at this. This is another strong ceiling at 52. Interesting. So yeah, like you might have looked at the top of this, even right here is really where you'd want to be paying attention. And you want to be like, okay, so like we shattered through every ceiling before. We had this period of consolidation from 45 to 40. We just immediately poked beyond those levels. This is not where you want to be buying out of the money calls. Actually, it kind of is a little bit. Because like generally, like when you're in an uptrend, it can just keep going. But what you should definitely be doing as well, unless you have like what you should definitely do as well is just look at where you are historically and see what happened around these price levels. Did it hold? Is it like a mid area of consolidation? And I really do think that gives you the strongest indication of what's likely to happen at any given level, given that anything can happen at any time. So yeah, like we're due for a counter trend rally on ARK. I think we have to test $40. Like we have to test $40. Look at that. Look at this line. That's a shelf. We have to test to 39 maybe. Anyway, we'll see like where it can go. But like you don't want to be, this is what I did, like I told you before, you don't want to be adding money at the top of something that is an untested price level. Or if you do, you just got to be managing your risk and knowing that the trade can turn against you or whatever. So yeah, like pretty freaking interesting levels we're at here. So I was really thinking we were in a bullish environment, but I think that's not what the order flow says. The order flow says that is bearish, and it is likely to continue to be bearish day after day. And like, there is a way to capitalize on that, though. I really think that if you're going to play in the markets, you have to be agnostic as to price. It's you're just going by the history, or like the macro. Like, you're either judging things based off of the opportunity or what happened historically, probably an opportunity, a combination of both. And then what's cool about our world is like, we are able to participate in markets using tools and processes that nobody in history ever had access to, like algorithmic trading. Even if that is just like setting a stop limit order, like that is a form of automation. And so like, imagine how like annoying and hard it is to like open up your contract and like figure out what your stop should be and like type in those numbers. That's work that can all be automated. And what I'm interested in building and developing on this show live in front of you guys, or go to zero trying, which is looks like, it's definitely not possible because I sell calls, but it is possible if you buy out of the money calls because you can go to zero with options, and that's because options expire. But we want to play with options because they're so volatile. And like, that is, first of all, that's what all the big players are doing. 60% of all trading is options that expire on that day. Like, everyone is trading expiring options. Anyway, it makes sense. And so today they're trading the expiring options that have a bearish tilt, but they're still trading expiring options. So yeah, that is like interesting, but we can't like play at that. I'm speaking for myself. Like I find it hard to like play at that level unless I'm like, we're really clear in a trend. Like, this might be a good time to do it. We're either at the bottom or we have a couple more weeks to go. I think we probably have more to go. And then you just get lucky and you can like follow the trend that way. What they're doing is they have real-time feeds of the data, and they have systems like analyzing the risk, and if they place a bad trade, limiting their losses. All of this can be replicated. I can't see why it can't be. And so one of the things that I think would be really fun is just to have a WebSocket connection that has all of the trades happening, and it just visualizes it each morning. Like, we could live stream this as it opens up, and you could just see what people are trading. So like, imagine if you had a series of tiles where each square was sized and colored according to the sentiment or the price or whatever, but sized according to the volume. And then they were kind of like either like waterfalling or rearranging in some kind of like way where like the biggest tile would just be the one with the most volume. That'd be tremendously useful to see in real time. There's no, like, that's very possible, not even that hard. And so like, that's what's cool about our world is like, well, WebSockets and streams exist. And so we can just go to, we can get real-time trade. Anyone can get real-time trade information. And like, I'll show you a little bit of what that does look like from my phone, because it gives you a little bit of an edge. I think it would actually. So if you could see those numbers, let's see how fast they're changing. So like, yeah, there's a lot of trades coming in, but yeah, like imagine visualizing every day. Like imagine you treated the markets like it was a war and you were going to battle, and you were kind of spying on what the other side was doing with this insider order flow. That's why we hang out and see what they're doing. And then you're seeing in real time, as the trades are coming in, an expanding box of a giant red box of QQQ. Right next to it, a giant red box of SPY. You think you're going to go put calls on? No, you're not going to put calls on. 2 giant red boxes? Come on. No, you're going to be following like the sentiment. And so a lot of what creates good judgment is information. And one of the best ways to be able to profit from information is timing. Those who know first get the fucking cake and eat it and love it, and maybe even they get presents and maybe even like an egg, a bird egg. Anyway, the early bird gets the worm, maybe, is what I was looking for. And so like timing in markets is everything. If you're the first to know, the first to act, that's the key. If you're the first to know, the first to act, you make the most money. Like if you happen to pick up a contract that is trading at pennies that explodes, I mean, that's how you can have an event that's like a 10x, a 30x, a 50x. And I think that these hedgies are getting those events all the time. I think they get them all the time, probably because they manipulate it, but I think they still get it. So yeah, that's about, I think, everything I have. I gotta fix that camera for you guys today. We can just look at the flow one more time to see kind of, oh, did I close it? No. Oh, that is the flow. So yeah, like AMC is getting some calls. I think they got, oh, interesting. So people are selling calls, or selling puts on AMC. So I think that's bearish though, isn't it? Like, I think that's bearish action. Oh wait, no, that's bullish. If you're selling a call, I guess that is bullish. Interesting. I've never really sold puts. I'm sure it just said everything backwards. Sorry, but like I don't really sell puts. I don't like puts that much. I like calls. Calls have unlimited upside. That's why I like them. But I am just looking to learn and experiment and really just do what the big guys are doing. So yeah, today we were putting on Tesla. We were adding puts to Tesla. And if you did that, you did great. You did great. Oh, you guys were putting on Disney? Damn. And it just massive bearish action today. If you actually look at the premiums, like we're at 200 million versus like 50 million. It's 4x on the side of the bears in terms of premium. Surprised that doesn't show up in the, I guess it does kind of. Yeah, so quite bearish action, which probably does mean for real that we are going to have bearish action on the opposite direction. So that is like not only something to think about, but something to prepare for. And the longer that I'm in markets, the more I ever wonder why I ever take sides and thinking something is bearish or bullish. And instead, if I'm going to be doing daily trading, managing positions daily, always following the trend of the actual order flow of the day. Because ostensibly, that really is the most informed money out there. And so we'll see, like I'm going to be trying that for a while and see, like I'll be very happy when we do the show and this goes to bullish and goes to green. But there's no reason to like do anything other than what the market movers are doing. These guys, they control the market. Like there's no reason to fight them. You could take your money off the sideline when you see bearish, or you could just buy puts with them. What are they buying? Like, you know, like let's look at the big premium before we go, and then we can wrap this up. So we got 42 million against Tesla. So maybe this isn't the day to buy calls on Tesla, right? It might not be the day to buy calls on Tesla. that day may come soon. It may come very soon. If Tesla tests 200, damn, that's going to be a great entry. I cannot imagine we're going to break below 200, but we could estimate the chance of it real quick by just looking at the chart. Let's see. So full history of Tesla is starting to look pretty consolidating, if you ask me. Look at that. That's quite the low here. I mean, that $100 is like such a good boundary. So what was prior support here becomes like this blow off top up to 170. And then we retrace. We don't touch 100 again. We find support at 110. But then when Elon Musk raids his investors and goes on a shopping spree to buy Twitter for billions of dollars, he drives the price way, way below the previous lows that people had seen. And so, like, if you're a naive investor in Tesla and you're just thinking like, hey, it's 180 and it hasn't been 180 since May of 2021, and then you see it get down to like 150, like that's not really where you want to buy more. You don't want to like just constantly be buying the dip. You want to wait until you dip below a prior resistance or a prior support, or you've pushed off that support and proven that there's stable ground. Now, maybe you push off that support and you get rejected again, then you even go below, but that's where you sell. Like, that's where you sell. So like, there's just no reason to hold through these declines or to buy them. Just look at the price history, because it really tells you so much information, and it makes sense that being historically informed will improve your judgment. And so, yeah, like this, I would have been like thrilled to be buying Tesla from below 150. I would be thrilled all the way down here. Like this would have been a great accumulation. And then if I was to sell, I probably wouldn't sell again until like 180, like 175 might be where, because like look at how many times we intersect that. Like that's definitely going to be a little bit of a ceiling. Why it becomes a ceiling? What was your prior support becomes your new ceiling, and it just really does always work like that. It kind of is that simple, with the caveat that in markets anything can happen all the time. Nobody can say. And so if you kind of look at this, this 300 level is going to be a really strong test. When we break above 300. Like, I mean, really, we're not in uncharted grounds on Tesla until 420. Like, it's perfect. It's perfect. So yeah, I think that the floor is going to be around $200, just based off of like what this level looks like to me. Of course, we could go to like 150. We could go to 80. Anything can happen. But like, assuming that the markets follow the order flow, then this really is, I think, our best guide in making trade decisions, at least in terms of like identifying timing and opportunity. Because until this bar is green and super green, they're really like, you have to have a really strong reason to buy calls. If this bar is all the way up here and it's super green, buy calls all day long. That's exactly what you should do. Go with the smart money. Go with the insiders. They have the best info. So we're going to try to keep doing that, and maybe one day like get to the point where I can show you some of these programs I'm working on and systems to be able to manage risk and hedge automatically, so that I can take the riskiest bets possible. Like basically, here's what the ultimate ideal for me. I want to be able to buy like deep out of the money options that expire in 5 minutes and walk away and know that my system will handle it. You know, whatever happens is going to be fine. Like worst case scenario, I lose 80%, or, you know, like all of this stuff can be created in rules. It is possible. And, I'm going to be on this planet for a long time, and markets are fun to participate in. So it doesn't matter if it takes a couple of years, it's going to be fun to build. But hopefully I can share that process with you guys and you find that valuable. But what I think you should find valuable objectively is just looking at the flow, the sentiment. If you were a bull today, I bet you got slammed. If you were a bear today, I bet you made money. And so what do you think the order flow is going to be tomorrow? It's going to be bearish. So you're going to buy calls tomorrow, or you're going to buy puts? Buy puts. Okay, that's the show. Thank you guys for hanging out. Until next time, see ya.